All right, so let's look at what the market is saying for the week. What is it the market is seeing at the moment, and what is it the market is going to be telling us, and the market is going to be revealing or playing out at the end of the week. So we're going to look at, based on history, what has the market been doing in the past few weeks, because we don't necessarily need to go to the next, to go to the past few months or to go to the past years to look at the market before we can make projection for the week. So since we want to make projection for the week, we could just look at the market from the weekly perspective. Let's start from the weekly perspective. Of course, I'm a day trader. After doing all of this, I'll still come back to my daily analysis and then tell us this is what I am seeing and this is what I'm seeing. So if I should come to the week in the market of EURJPY, what am I seeing? I'm seeing a bullish move. The market has been just crazily bullish. It has just been crazily bullish. So what opportunity am I expecting? I should be expecting an opportunity of buy at the long run, because the market is bullish. You want to go alongside with the market movers. You want to go alongside with the trend of the market, So because the market is bullish, it means that my bias should be for a buy. Then I come to the daily, where I pick out my current support zone, my current support and resistance zone. I pick up my current support and resistance zone. So when I come to the daily, I look at the support. So first we have something here already marked out. So let me take out this guy. So we have this guy here. We expect for the market, if it is going to buy, this should be a ceiling we might be considering. This is something like a ceiling. So let me project it a little more to the future. And then this is the floor. So long as the week is concerned, this is the floor. So let me just color it. Let me color the both of them. Instead of doing this thing, I could just color the both of them, the ceiling and the floor. The ceiling and the floor. So this is the floor and this is the ceiling. So everything that's going to be happening in between, their actions that we could just take it based on daily perspective, So since I've marked out my ceiling and my floor, where are the next probable points this market is going to react if it comes to? So that's why this guy is here. This place, this market is likely going to react when it comes here, just as it is reacting currently. And then we also expect for this market to react here when it comes to it. It is probably going to react at this level when it gets to that level. But at the long run, for the week, we expect for either a bullish move to come and react here or break it and go bullish, or somehow it come and react here and come bearish and find a support here, basically. So having done that, I go to the 4 hours time frame. So from the 4 hours time frame, I might want to pull out my my trend line, because I seem to have a trend line here. From the 4 hours time frame, I have a trend line here. So I might want to consider this trend line. And then the next resistance zone that is there. So the next resistance zone that is here is this guy. So this is the resistance zone that is here. So we might want to look at this place. So it's either for this market to retest this place and then continue the mini bearish move. But if you come to the 4 hours time frame, you realize that the bullish move is finding retracement. So anything the market is trying to do in form of a sell is a retracement. So your retracement, if you're trading retracement, you don't want to over leverage. You don't want to overextend your projection for the sell, your projection for the TP. So you just want to take it within the range of that daily perspective. So this is everything the market is doing here is a retracement, except the market come and find support here and then continue its bullish move. Everything it is doing here in form of a sell is a retracement. So we expect for the market to come and continue. So this is just a correction of that retracement to come and find a resistance here, and then continue the retracement. But then how do I know that this market has terminated its correction at this level? That's why I go to the 1 hour time frame. The 1 hour time frame, what are those things I'm looking at as an indicator for the overlapping for the elapse of this correction of the retracement for me to continue my sell? Overall, it's a bullish move, but we are catching the retracement. We are catching the retracement. So that's what I'm trying to say in essence. So how do I know that this particular correction of the retracement has terminated? So at this place, is either it gives me weak rejection, I'm looking at 2 to 3 week rejection, or I'm looking at a 1 week rejection with a double top. And all of this, you should have understood it if you've gone through the courses. So I'm looking at a weak rejection and a double top. I'm looking at either a weak rejection and a double top, or I'm looking at a multiple weak rejection. So here, I'm having some kind of weak rejection here, but this weak rejection, they are not strong enough. So I'm waiting to see if we're going to have something like a double top here, even though we're having something like a double top here, but this candle is supposed to close bearish for this double top to be confirmed. That is why you go to the next lower time frame, which is your 15-minute time frame, so that you can draw conclusion whether this guy has given you a double top, a double top, a double top. So we have the first touch of the double top here. Let me mark it out for you. So we have the first touch here, all right? And we have the second touch here. Sorry. And we have the second touch should be here, right? So we expect it to give us another second touch here. So if this happens, then I will now think of buying, I will now think of selling the guy. Then if I should sell this guy, this is what my projection is going to be like. This is what my projection is going to be like, right? So let me take it more to the 1 hour time frame so that I could see with clarity, you know. So first, if you want to take your first TP here, it's not bad. It's not bad to take your first TP here. But overall, I want to go down to this place, to the next resistance zone. Sorry, the next support zone. Where's my next support zone? This is it. Remember, this is your support zone. It's not yet the overall support zone for the week. If it is a weekly chart, we're expecting the guy to move all the way to this place. If the retracement continue to that level, we expect for it to move all the way to this place, all the way to this place, you know, it should move all the way to this place. So if you want to see with clarity, you go to the 4 hours time frame. That is why it's a weekly, if you are looking at from a weekly perspective, you know, so this is what I'm expecting from the weekly perspective. But if I'm taking this trade, you know, I would want to put my first TP here on a daily basis, first TP around this place, because I need to correct this particular zone. You know, supposed to be here. So my first TP should be here, and then another TP should be here. Ultimately, I'm looking for this guy to get to this level, because there's a tendency, why am I putting my first TP here? There's a tendency that this guy is trying to correct and then continue a bullish move. Probably is trying to show us that it is a new consolidation zone. Sorry, please. It's a new consolidation zone that is about to form here. So if it is a new consolidation zone that's about to form here, it means that if I don't put my first TP here, I might likely lose everything I've gained from here. So I will have a TP here and then consider having another TP here. So it is from here that then I'll now lock my profit after it has gotten here, and any other thing that happened, let it happen. So this is what I'm looking out for in the market for EURJPY. So let's go to the market for Euro USD, Euro USD. So in the market for Euro USD, last week, we just took a very brief trade on Euro USD and it came and cleared our stop loss before. Of course, we're already running on profit on EURJPY. So it was just a very short trade. I wanted to check so that if we could continue there, let me remove all these guys. They are not part of the original markout, right? So let me go to the daily time frame to mark out my possible. But if we're looking at it from the weekly perspective, we want to check what's the overall trend from the weekly perspective. Can someone tell me what's the overall trend from the weekly perspective? What's the overall trend from the weekly perspective?
It's bearish.
Okay. Someone said it's bearish. Does anybody have something contrary? The overall trend. All right. So that means you all agree that is a bearish trend, which is very correct. Is a bearish trend. And I think if you try to connect a trend line, you see the level of connection. Though it's not really very perfect, but it's a bearish trend, right? It's a bearish trend. What if I try from this level, not going too far? So you could also see that even from here, it's still a bearish trend. So what is happening to this place? You know, so that is what you want to look at because you are not taking the trade from the weekly perspective, but overall, you want to be selling. Overall, you want to be selling. Why? Because you want to go alongside with the trend of the market. So you go to the daily time frame and see what the market is doing. On the daily time frame, what trend is there? What trend is there? On the daily time frame, what trend is there? On the daily time frame, what trend is there? So if you are looking at it from here, so from here already we have this guy. Sorry, can you all hear me?
Yes, sir.
All right. So if you're looking at it from here, we have this guy here. I'm just trying to establish something before I come back to our normal. Or let me just let that be so that I don't confuse you. All right. So you just pick out your ultimate high and ultimate low, your ceiling and your floor for from your daily time frame. So I want to look at where will I pick my floor for now. So I would want to look at this place, but to some extent it's just too close. But nonetheless, you still want to, if it breaks this zone, the next possible zone you want to consider is this zone. The next possible zone you want to consider. But I don't want us to go too far. So let's look at it from here. So we have this guy here. Excuse. And then I also have this guy here. But at the same time, I hope you know that if you're picking from here, you are still going too far. Why? Because you already have an immediate zones here already. So you don't want to go this far. So I would want to look at this guy because that's what we call recency. Recency support, recent support, recent resistance in your F&R, frequency and recency. So you want to look at the recency of that particular trend or that particular support zone or resistance zone you are looking at. So I just want to pitch it at this level. If I've established this, okay, I might want to color it. Let me just color it. This had been my old tradition, even over time. I don't really do those things again, you know. So I will just color it. Then the next possible place this market is going to react is here. The next possible place this market is going to react. Sorry, I'm trying to admit somebody. Is here. Permit me to just use this guy. The next possible place this market is going to react is here. So the question is, where am I going to take my position at? That's where you now move to the lower time frame, your 4 hours time frame, to look at where is the market running from. Now, this is a very good zone. This is in fact, I would love to use my rectangle instead. So let me bring it back to the original color. What was this? Let me bring it back to my original color. So let me think. So this was where I stated that the market is going to start it buy. No, sell. Was it here last week? Yeah, it was here last week. I said that this market should start it buy here, it sell here, and then we missed the sell and all of that and all of that. So I wanted to take a buy here, but it couldn't hold. It was at this level that I wanted to take the buy, but it couldn't hold. It broke the zone, and then the next place we're expecting for this market to get to is this level, this zone here. The next zone we're expecting for this market to get to. But then where are we going to take our entry now that this market is at this level? Does it mean that we're not going to have food to put on our table? No, there's going to be an opportunity. So you now want to take it again to, or you might want to mark out this level, even though I don't really would like this level, but this is also a fair, yeah, it's a fair level because some activities are happening here. I think we're going to see that clear when we get to the lower time frame. So let's come to the 1 hour time frame and see what's happening here, the 1 hour time frame. So you see that now. So initially it looks as if the market is going to respect this zone. This is zone. Buyers have been holding this place for a while, not until the sellers came and broke it. Again, they came and broke it here. If you realize, after breaking it, they came and retest, the zone came and retest itself, but we couldn't still take the trade because we were already holding a particular trade. So when it broke this zone, look at it came and retested. And let's go to the 15-minute time frame for clarity. So these are the things you want to pay attention to. These are the things you want to pay attention to. Trading is not as difficult as people want to force it to be. It's not, I assure you. So the moment it broke this place, look at it, came and retested it here. Even though this was at night, all of these things happen at night. So you wouldn't have still taken this trade. All these things happen at night. But let's say that you set a limit because you know that, okay, this is the zone. You actually intended to take a buy here, but couldn't hold. So you wait for it to break and retest. So you probably just set your limit here, and then your TP should be around this level. That's where we expect for this market to get to. But because of what this market is doing currently, what are we expecting from this market? I will want to adjust this guy here. So if this guy currently is doing what we call a retracement, this is what I'm seeing. This is what I'll be waiting for the market to do. If this market come and coincide here, for some time it might want to, even though this is not a good zone at all, this is not. So I will not consider this guy. So if this market should come here, all the way to this place, we are running out of time. But let me try and round up. This should be the last distance. Then before I get our questions. So I'll expect for this market to get all the way to this place. And if it gets here, where's my trend line? Let me come back to the one now. I think I have a trend line somewhere. Okay, oh, come on. The trend line is far, it's far. So I might not want to consider the trend line from that angle. How about this guy here? Yeah. So this is what I'm seeing. You know that we have a counter trend line here. I hope you see that it respected this counter trend line, right? Yeah, we have a counter trend line here. But we're not going to take this guy because it does not align with the trend. Does not align with the trend. So I'll wait for this guy to get to this place. When it get to this place, this is where I'll be taking my sell. So where will be my TP? This is my TP. I'll be taking myself from there. How many pips is that? How many pips projection? 255 pips. And what would be our risk? Our risk should be 37 pips. Our risk should be 37 pips. 37 pips for is a fair risk to reward ratio. So this is what I'm expecting for the market of Euro USD. But you take your trade in the 15-minute. Remember the confirmation, loose confirmation we look out for. If you've been a trader around, you've been my trader around, we look at weak rejection. If it's a weak rejection, we wait for a retouch or a retest. If it is multiple rejection, boom, you want to hit it from that place. So that's that about that. So this is what I'm seeing. I'll drop all of this on the Telegram group. But let me get a question. Is there anybody with a question before we call it a day?
No, I don't have any from my own end.
All right. You see, I can drop this signal, I can drop this trade idea on the group. And as beautiful as it looks, and the signal might actually play out. Some people will lose and some people will win. So the problem is not from a trade idea, either the problem is from the market because we have some people who won. So the problem is from how the traders approach the market. So that's where at the end of it, I'll still say that the mindset of the trader is more important than the strategy. So let me get, if any other person have, if someone at all have a question, you can ask the question as we progress before I call the call to an end.
Okay. I think one of the questions I wanted asking was what you just answered, but I still would ask this. How do you know the lot size to use for your account?
Okay. Okay. Oh, there you see that on module 4, module 3. Let me show you real quick because this guy, we are running out of time. How many minutes are we left with? 6 minutes. Yeah. So you come to your position lot size. The position lot size. Let me extend this. So you come to my FX book. You see this on when I was talking about how to manage your trade, how to manage your trade, how to manage your, what is it now? How to do your trade management, all of those things. You see it. But for the sake of this class, let me answer your question. So you come to my FX book. When you come to my FX book, continue. So you come to my FX book. If you want to know what lot size to use, first you impute the currency pair. Each currency pair have different frequency and wavelength. Hence, the disparity of lot size with respect to the stop loss, because your lot size is determined by your stop loss. So first you impute the currency pair. What currency pair did you just analyze? Euro USD. Account currency. So if the account currency is of course, generally here in Nigeria, we use USD. So you just leave it there. Account size, let's assume that is a 100K account, just as I'm about to begin to trade. Is a 100K account. Risk ratio, what is your permeable risk? So let's say that the permeable risk you have on that account is 1%. If it is a prop firm, I would advise for you to go with 0.5%, or if it is your account, you can go 1%, 2% thereabout, is fine. But don't exceed that limit. Then stop loss. What stop loss are you using? Let's come back to the trade. I said that, what stop loss did I say we're going to be using? Can someone remind me? What risk did I say we're going to be using? 0.37, right? And then TP is this. I hope we're following at all. So TP will be here, right? So this would be my stop loss, 37 pips. So I'll go back to my position size calculator. I'll now put my stop loss. What will be my stop loss? 37 pips. I'll put my 37 pips. Then you now calculate. Can you see this? Can you see what lot size to use? Sizing, 2.7 lot. Sizing, 2.7 lot. Can you see that? So this is the lot size you are going to use for that account with respect to the stop loss you are using, with respect to the permeable risk you have on your account. So if you want to risk 1% of your account, fine. If you want to risk 2% of your account, it's fine. Of course, if it is $100 account, you can't say that you are risking 1%. It's, it's rubbish, you know. So you want to risk maybe say 2, 3, or thereabout, you know. Or you want to risk 5%, 5% at least is good enough. 5% of your accounts per trade. Or yeah, per trade, per day, you should risk 10%. So per day, you should risk, if you are risking $10, how many times will it take for you to blow $10? How many losses on a stretch will it take for you to blow $10? So that means you need to take 10 different trades before you blow that $10. Well, if you want to extend the length or the longevity of the life of your account, you want to reduce it to risking $5 per day. Then it will take you 20 different trades on a stretch for you to lose that account. So those are the little mathematics you do with respect to your permeable risk. So you just first impute the currency pair, and then the amount of the account size and the ratio, the risk ratio you want to use for that account size. You want to risk this particular ratio. Then the stop loss of your account, if you come back to this trade, you see that our stop loss is 37 pips. So my stop loss is 37 pips. I impute my 37 pips. Then I'll click on calculate. Calculate. The moment you click on calculate, all of this result will display. So you are going to be using 2.7 lot size. That answer your question?
Yes, sir.
All right.
Then lastly, you made mention of TP1, TP2. Is it one trade that you open that gives you, that you use to set your TP1, TP2, or you open two?
Okay, you open two trade. Say for instance, here, because you want to, okay, let me go to the currency pair. This guy, we have just 1 minute left. All right, so this is it. All right, so you see that this guy is already retracing here. You see this bullish, this bearish guy here. So you wait for it to close. So let's assume that I want to use this guy. Let me go to the 1 hour time frame. Go to the 1 hour time frame. So what am I seeing from here? If I want to have TP1 here, my TP1 should be here, right? My TP1 should be here. My TP1 should be here. So I'll open, if I'm going to be using one lot size, a standard lot size, so I'll split it into two. So the first TP will be 0.5. Some people can use 0.5, 0.5. 0.5, 0.5 gives you what? One standard lot size. Or you can choose to use 0.7 and 0.3. So 0.7 will carry the highest, 0.7, which is the highest lot size, will be at the first TP. Then the smallest loss will be at the lowest TP, because the moment you have your TP1 hit, you go and lock your profit. And then all that thing that happened to the other guy, you are still on a profit. So you open two different trades. You know, if you're going for 3 TP, you open 3 different trades and all of that.
Okay.
All right, so this class has come to an end because we are almost